Let's talk about now what is basically the objective and the scope of this particular standard, right? Essentially, where we started from is, we look at the returns. Of course, the higher the better, and that's where this EPS has its own significance and relevance, right? So when we bring that context, we are saying that the idea of the standard, the very reason why the standard is created, so that we have a clarity on the comparability, right? So the standard would prescribe the principles for the measurement as in determination and the presentation of EPS so as to improve the performance comparisons between different entities in the same reporting period and the different reporting periods for the same entity. What would that mean? We are simply saying that if there is a company X and its competitor company Y, okay, so we are looking at, let's say, the current year's profits and the performance versus previous year, and that's where we're looking at the current year and previous year of also the competition, right? So if I say that, for example, the EPS, I'm just taking some hypothetical numbers. Let's say for the company Y, which is the competition, okay, this EPS for the last year is, let's say, 10, that has become 12. And for company X, it is, let's say, 10 again. So it could be really theoretical, but let's say it is 12, and this has become, let's say, 80. Okay. So what we observe here is that, right? So for company X itself, let's say this is the company for which the analysis is expected to be done, right? So we are saying that the last year the company had a earnings per share of 12, which has increased 50%, right, from 12 to 18. So that's a 50% growth, right? So that's what you are looking at, as in the period, the comparison between the two periods for the same company. But also you are suggesting that last year the compete had a lower EPS as compared to the previous year of the company X. And while even that company has improved in terms of the performance, this growth is 20% only, right? So people are able to analyze it by looking at it on the face of the financial statement of, let's say, the company. And of course, the company X doesn't have to present the financial statements of company Y or any other compete. The whole idea is that this measurement criteria is helping compare the performance of compete as well as that of the comparable period, let's say the previous reporting period in this case, right? So that's how you start looking at the relevance of why probably this standard is required. Now, importantly, I'll go back to the statement. The standard determines the principle of how do you calculate the EPS, right? So it's easy for anybody to analyze that, this company is great. I mean, it is not just great in terms of the profit per share in each of the years, but even the growth is comparatively far better as compared to the compete. The question is that, how are you arriving at, how are you calculating that EPS? How do you determine that, and how are you presenting it? And that is where you look at the need for the standard, right? The standard gives all those guidelines and the ways in which, for example, EPS should be calculated, right? We'll see to it that it's not a very straightforward process to calculate EPS just like that, and we'll do the reasonings of those as well, right? The scoping would apply to any organization, any entity who have issued ordinary shares, and of course, to those companies where Ind AS applies. Okay, and of course, when you are disclosing the EPS, you need to calculate, you need to determine and present the information as per this standard itself. Now, it does not only apply in the separate financial statements, but also the group financial statements in case an entity is presenting those financial statements at each of the levels. Needless to mention, the relevant disclosure shall be based on the group financial statements, at a group level, and in the standalone financial statements for those standalone, disclosures. So that's how you start looking at the assessment of the disclosures part as well. So both the determination, that is the measurement, as well as the disclosure requirements would apply each at the standalone as well as the consolidated financial statements perspective, right? So all we are trying to highlight is that if there is a company X and there is a group which includes company X, company Y, company X1, company Y1, and so on and so forth, at a standalone level, you shall present that EPS also of the previous year, right? And you shall, if you are presenting also, you're required to present the consolidated financial statements. So you would also do it at the group level, right? So the EPS for current year and the previous year also needs to be presented, right? Now, importantly, what you want to remember here is, while there is a discussion around that as well, eventually in this context, the moment we say consolidated financial statements, right, we would also bring in the concept of non-controlling interest, right? Some shares that you don't own, from that particular subsidiary, for example. Let's say, for example, in this case, if there's a company X which has 80% shares in company Y, now essentially company X is the parent company. So at a group level, it will be calculating the EPS. Okay, but what you need to remember here is that while company X 100% of profits will be considered, right? The share of profit that pertains to company X is only confined to 80%. Okay. So whereas the group earns in totality the profit earned by company X as well as by company Y. Okay. There is a share of 20% which belongs to or relates to the NCI or the non-controlling interest. So we have to factor that part when we calculate the EPS at a group level. Okay, so that is something that we will see when we look at the measurement aspects. Okay, now this is more conceptual, and from an examinations perspective, you might want to remember that, of course, that at a group level there are some adjustments that we need to make, when we measure that EPS specifically. Okay, now broadly what we say is that just to bring this context of measurement, there are two types of EPS we are referring to. One is a basic EPS. We have, and whenever we use the word EPS, we mean to say basic EPS, right? And we shall also be discussing the concept of something called as the diluted EPS. Okay, so we'll be talking about that in detail in the due course, right? Essentially, when I look at the very idea of EPS, we refer to, of course, the word basic EPS. The way of calculation of EPS or the basic EPS will be what is your profit or loss, right? Needless to mention, when I say profit, I intend to also cover loss. So there could be a EPS or a loss per share as well. Okay, right? So need to be reading that in the same context, right? So the basic EPS shall be calculated by dividing the profit or loss attributable to ordinary equity holders of the parent entity, right? At a group level, we are referring to the word parent entity. Okay, so importantly, we are talking about what is that share of profit that is there available with the ordinary shareholders or ordinary equity holders, right? Is it profit before tax? Is it profit after tax? Well, in all probabilities, we are of course referring to the word profit after tax, right? Because even tax is an expense in itself, right? But then, is there something that we adjust out of this profit after tax? There could be, for example, a dividend attributable to preference shareholders, right? Who are not, of course, the ordinary shareholders or ordinary equity holders. So even that adjustment has to be made from that numerator, from that profit or loss. Okay. The denominator is the weighted average number of ordinary shares outstanding during the period, right? It is not the number of shares outstanding. It is a weighted average number of shares outstanding, right? Let's try to understand basically why this need, why this thought process. You always want to remember that fundamental attribute of the standard. Profit is a function of money, and we'll just see why is that important in this discussion. Okay, the idea of, or the objective of the information around the basic EPS is to provide a measure of interest of each ordinary share in the performance of the entity, right? How much are you making on a per share basis? The total profit is important, but if I'm owning one share in a company, or if I'm owning 100 shares in a company, in a large listed company, for example, what is that return that comes to me on each share is something which is the objective of measuring or calculating the basic earning per share, right? So the formula, of course, we have certainly discussed that beforehand, but it says the profit and loss attributable to the equity holders of the parent entity divided by the weighted average number of ordinary shares outstanding, right? Now, let's try to spend a couple of minutes talking about why weighted average. Okay, think about it like this. Let's say there is a company X, and let's say there's a compete, which is company Y. Okay, let's say the profit after tax, and ignoring the preference dividends, etc. in this particular context. Let's say the profit earned by company X is 1 lakh, and the profit earned by company Y is 80,000. Okay, and say, for example, the number of shares outstanding from company X perspective is, let's say, 50,000. Okay, and also we are saying that the profit or the number of shares outstanding in the books of company Y are also 50,000, right? How difficult is it to calculate the EPS, right? So I would simply say this is 2 times, and this is 1.6 times. Which company is doing better? Higher the better always, right? So we may say company X is doing a better performance. Okay, company X has more earnings per share as compared to its competitor, which is company Y. Well, I would probably be interested in investing my money in company X. Okay, but hang on, we would discuss on the concept of profit is a function of money, right? Profit is a function of money. Now, where we want to kind of bring this concept is that when you look at the profit after tax, you would remember profit for the year, profit for the year. Okay, now you are earning this profit over the period of time, over a year, for example, right? The question is that when is that money from the shares available to you? Okay, what is the time periodicity over which the money was available with yourself? Okay, so if I were to bring that question here, I'm just taking an assumption in this given scenario. Let us say that the number of shares outstanding since beginning in this case is 50,000, right? Which means that whatever were the number of shares at the starting of the year, they are available throughout the year, which means whenever you issue these shares, the money from those shares is available with you as company X for the entire period under consideration, right? The money that you received by issue of these shares, right, is available with you for the entire period, and you earn the profit for that period. Okay, so it would be 50,000 straight away. But let us say for company Y, say for the sake of argument, we are saying that 30,000 shares, let's say, were outstanding since beginning. You had issued these shares somewhere in the past, or maybe on day one. Let's not worry about that part here. But then the money that was available to you as company Y, right, for the whole year, it's for these 30,000 shares that the money was available with you. Okay. And as far as the remaining 20,000 shares are concerned, let us say that this issue was done on the last date. Okay. You issued 20,000 shares, but at the end of the period. Okay. Now, what does it mean? Of course, you received the money because you issued the shares. But was that money available, or was that money used to create profit? The answer is no, because you earned that profit over the period, but the money was never available with yourself. Okay. So yes, the money is there, but on the last day, you don't really use that money to make a profit. You would be able to use it maybe in the next accounting year, but not in this year. Which means what? It means that I need to calculate not how much are the number of shares outstanding at the end of the period, but what is the weighted average number of shares outstanding, right, for that particular period. Okay, simply means I would look at the, let's say, the number of days or number of months, whatever we want to calculate that. So we may say this is available for 12 months. This is available for 12 months, but this is not available at all. You have the money, but you did not practically apply that money to earn profit out of this money, which means that the profit of 80,000 that you have made, you practically only use the money by the issuance of those 30,000 shares. Okay, you earned that 80,000. There's no doubt about that. But you earned that 80,000 out of the money by using, the shares to the extent of 30,000, which means that I cannot take the number of shares outstanding, but I have to take the weighted average number of shares outstanding. How do we calculate that? Simply put, we have these 50,000 shares for 12 months divided by 12, the number of months, for example. And in the second case, we have 30,000 into 12 plus the weight that I would want to assign to those 20,000 shares, the money that is available to me. For how long? Practically 0 days. Okay, right. So which means that the time weight that I want to assign to the money that I've received by issuance of those 20,000 shares is 0, right? That gives me the weighted average number of shares as far as company X is concerned is 50,000, and the weighted average as far as company Y is concerned is going to be 30,000. Now that gives me, by the way, my EPS or the basic EPS, right? This is of course still 2 times, but when you look at 80 divided by 30, that gives me a earning per share of 2.667, right? This is 2.667 times, which means that company Y has performed better as compared to company X. The return on each share, the return per share, the earnings per share of company Y is higher when compared to the returns per share or the earning per share from company X, right? Fundamental aspect, profit is a function of money. You always want to remember that as a concept, okay? Not relevant from an examination standpoint, but certainly relevant from an understanding standpoint for sure, okay? So when you look at this entire context, we are saying that at a group level, as we discussed before, the earning should be the consolidated net profit or loss for the year or the period after adjusting any taxation. So it is always profit after tax, subject to non-controlling interest. So you would actually pay to that non-controlling interest. You don't call it a payment, but you say, you know, you need to factor in what is the profit which is not available to yourself as the parent. Okay, so you need to bring that element and adjust that part. And finally, any returns to preference shareholders. Okay, any returns to the preference shareholders will also be considered in this particular calculation here, right? Eventually to arrive at what is the profit attributable to, right? We use the term, the profit attributable to the ordinary equity holders of the parent entity, right? What is the share of profit that belongs to those equity shareholders or ordinary shareholders is something that you want to remember in this case, okay? Very, very candidly, we have discussed this for the purpose of calculating the basic EPS, the amount attributable to the ordinary equity holders of the parent entity in respect of. So what would that profit be including? It would include the profit or loss from continuing operations. We exclude any profit that an entity makes from the discontinued operations. Why would we want to do that? Because that profit is not going to be available. That is unlikely to be available in future. And that's the reason why, even though the entity has made that profit today in the current year, it is likely the profit would not be available in future. And that's why you are excluding that part. Okay, so the amount attributable to ordinary equity holders only with respect to the profit or loss from continuing operations, and of course, attributable to the parent entity has to be included. Nothing more than that, right? And separate EPS information is disclosed for that discontinued operations, either as a part of the notes to the financial statements or within the statement of profit or loss. You normally would observe that the disclosures would comprise of this information with respect to the profit element or the EPS from discontinued operations, right? We have discussed this beforehand. The amount shall be adjusted for the after-tax amount of preference dividend, which is basically, you know, available or has to be paid with respect to the preference shares in case there is a settlement arising for that matter. Okay, so that is something that you want to consider. This is very clearly, we have discussed at length that we do not take the number of shares outstanding. We only take the weighted average number of shares outstanding. And those would include, for example, how many shares were outstanding at the start of the year. Is there anything that has been, you know, that there's a buyback from the company? And in case there are some issues made during the year. So you would make the adjustments for these transactions, right? You would apply the time weight factor to these. You would apply the time weight factor to these, so that's where you start looking at. This is for the entire year. So you take a multiple of 12, for example, right? And on this basis, on during what month or during which week or during what day are you doing a repurchase? And let's say on what date are you issuing more shares? Again, the context remains the same, right? What the context is, profit is a function of money. If I'm buying back some shares, I'm giving away the money. So in theory, my profits should be reduced. And that adjustment has to come in my denominator. That look, I've purchased those shares back. Effectively, there is a lesser money available to me. So my EPS should reflect that. At the same time, if I'm issuing some shares during the year, even that should change my denominator. That should increase my denominator for that period of time when that money is available to me, right? So the time weight is very, very critical in all contexts. This could be, for example, on the basis of number of days. It could be on the basis of number of months or weeks. So those kind of averaging are permitted by the standard in general. In your examination, you might actually, observe, for example, whether your standard says at the start of a month or at the end of the month, etc. So be very, very careful about the dates, right? So you should be looking at that very, very importantly. Otherwise, the calculations can go wrong also. Okay. As we said before, your profitability is clearly impacted by, let's say, the preference dividends itself, right? Also, importantly, we have discussed in case there is a change in your performance, change in your previous year's financial statements, maybe because of a change in accounting policy, maybe because of some rectification of error. So for any reasons where the comparative figures have been restated, even the EPS for all those periods should be restated. Why so? Again, you need to give a comparable information. What was your EPS last year versus what is your EPS this year? That growth is reflected. That growth is reflected. You want to really remember that part, right? And that's the reason why this retrospective adjustment is made on the calculation of EPS, right? What you want to remember here is that you would have reported, let's say you're sitting in, let's say 2020, 21, and you had prepared the financial statements for 2019, 20, right? And let us say you also had, of course, reported in the previous year, 2019, 20 and 2018, 19 information. And in this particular period of time, you would have reported the EPS, okay? But now, because of some changes, there is a retrospective adjustment made and you are representing your 2019-20 numbers with the new, let's say, profit figure, right? Now, is this EPS incorrect? The answer is no, but you cannot show that same EPS in this year because you are comparing the performance of this year versus the comparable reporting period. And that's the reason why the EPS of the previous year is also restated to that extent. Okay. Also, finally, you would like to remember here is that in case there are more than one class of shares, right? In case there are more than one category of ordinary shares, you need to calculate the EPS for each such category, for each such class. Every shareholder in terms of the categorization should be aware of it, right? What is the EPS that is, of course, available to him, for the category of shares that he is owning in that particular company. Okay, we have discussed this already in terms of the number of shares. You look at the weighted average, the time weight is applicable, the outstanding number of shares out, at the beginning of the year, are there any shares purchased back, bought back, or a buyback is done, or let's say if there are any shares issued. And of course, you look at the time weighing factor, which could be also an average, just to kind of bring it. A reasonable approximation is adequate in many circumstances. From an examination standpoint, I believe you should be a bit more comfortable in seeing the number of months as applicable in this scenario. Okay. Now let's not go theoretical around it. Let's try to apply the concept of how do you calculate EPS, let's say in a given circumstance. It says that Profit Limited has the following data in relation to the number of equity shares issued during 2018-19. The question's requirement is, as per Ind AS 33, you are required to compute the number of shares for the purpose of calculation of basic EPS. Now, what is the number of share? The closing number is 10,25,000, but what we need to calculate is the weighted average number of shares outstanding. We need to calculate the weighted average number of shares outstanding. How do we do that? Let's try to understand this. We are given that this is 1st of April and the financial reporting period is, ending March 31st, 19, and that is what is basically the date here. So this is 1st of April. I may say the number of months are 12. On 30th of June 18, you are making a further issue, an additional issue, for example, that would be, for example, for 9 months. Okay. On 30th November, you have got convertible preference shares, which are also converted to equity shares, for example. So which again changes the number for, we're talking about how many number of months remaining. We have December, January, February, and March. So this is 4. And finally, on 28th of Feb, you're doing a buyback. So that is, again, you're practically given the money back. It can be assumed that these shares are extinguished now. The moment you look at the word buyback, you say that you have given the money back. Effectively, the money is not available to you. So for 1 month, that money is gone out of your pocket, right? So from that calculations perspective, we can arrive at the number here, and let's use these numbers: 5 into 12, 375 into 9. So let's do that. We have 500,000 into 12, 375 into 9, 250 into 4, and minus 1 lakh into 1. Now, this would be a clear multiple here. This would be 60 lakh. Okay. 375, let's do this calculation, into 9, that would be 33,75,000. This would be 10 lakh, and this is of course 1 lakh. So when I look at the total, this becomes 10275,000. Right, so 1,02,75,000 divided by 12 gives me my weighted average number of shares outstanding under the context of earnings per share, or EPS, under Ind AS 33. Okay, again, going back to the requirement of the question, we look at what are the number of shares effectively, for how long is the money available from those shares. It is available for the opening balance for the entire 12 months. You got more money for 9 months. You got yet another lot for 4 months, but you repaid something back for 1 month's time. So you are looking at profit as a function of money. Of course, we are not required to calculate EPS here, but we can certainly calculate the, let's say, the number of shares, the weighted average number of shares outstanding, right? In this question, the calculations are done on the basis of number of days. Absolutely fine, right? The average thing is not very, very different. Okay, in this case, you need to remember in your examination, you should normally be expecting on what basis your examiner expects you to calculate that. They may say use number of months as the basis, or they may expect you to do it on the number of days as well. Does not really make any difference whatsoever, right? What we assumed around this, that we have assumed the moment you look at a buyback, they have been canceled, they have been extinguished on the same date, right? So that is where you start looking at the calculations applicable in this scenario. All right. Of course, the weighted average number of shares are taken on the basis of what is the approximate number in this particular scenario there.